This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending February 5th, 2022. Our question this week is, what does buy the dip mean? The answer will be provided later in the video. This week the market ended higher. The Dow Jones Industrial Average decreased minus 0.06% on Friday, but was up 1.05% for the week. The S&P 500 increased 0.52% on Friday and was up 1.55% for the week. The Nasdaq increased 1.58% on Friday and was up 2.38% for the week. Looking at the week, we can see that there were 11 up finishes versus 4 down finishes for the major indexes. On Monday, Tuesday, and Wednesday, all 3 major indexes finished up. On Thursday, they all finished down. On Friday, the Dow Jones Industrial Average finished down, while the S&P 500 and the Nasdaq finished up. The new unemployment claims were 238,000 versus 245,000 expected. It was reported that there were 4.6 million more jobs openings than unemployed workers in December. Companies cut 301,000 jobs in January. U.S. oil prices topped $90 per barrel on Thursday. After reporting their earnings, Facebook stock plummeted 26% in its biggest one-day drop ever. Snapchat, however, soared 53% after they reported their earnings. And the U.S. 10-year Treasury yield rose to 1.92%. New unemployment claims, number of job openings versus the number of unemployed, companies cutting jobs, U.S. oil topping $90 per barrel, Facebook stock plummeting, Snapchat stock soaring, and the increase in the U.S. 10-year Treasury yield are all news, and news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What does buy the dip mean? Buy the dip is a simple investment term that means exactly what it says. Buy the dip. That is, purchase a stock or an index after it has fallen in price. That is, after it has dipped. The drop in price may present a great opportunity to get shares at a discount and therefore enhance your future gains if and when the stock or index rebounds to its previous high or even higher. If you already own some shares, then a dip in price would be a great opportunity to bring your average cost per share down. If you don't already own shares, then when the price dips, may be a great opportunity to buy the shares. Do you buy the dip? Did you buy this last dip? Did you buy the dip in Bitcoin? Did you buy the dip in SPY? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school, and it wasn't taught for a reason. You are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor. They did not teach you how to be a critical thinker. And they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing, books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside trading strategy. You can learn more about the Southside trading strategy at SouthsideSchoolOfFinancialFreedom.com. Here is my trading watch list from the week ending February 5th, 2022. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week was Riot Blockchain Incorporated, ticker symbol RIOT. It's in the second column. It increased 12.72% for the week, and it was up 12.04% on Friday. Riot Blockchain is a U.S. cryptocurrency mining company. It primarily focuses on Bitcoin mining. It has at least 7,043 miners. The company has several subsidiaries. Through its subsidiaries, Riot Blockchain also seeks to develop a blockchain-based escrow service for wholesale telecom carriers. Riot Blockchain holds a 13% share of a digital exchange company in Canada, and it holds investments in a company that provides cryptocurrency accounting and audit technology services. Looking at a summary of results, you can see that Riot has decreased minus 25.79% year to date. I do have Riot calls, and they expire this month. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow. That is trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 Index ETF SPY so far in 2022. The Southside portfolio is down minus 16.7% versus minus 5.53% down for SPY, a difference of 11.17%. The Southside is losing to SPY by just over 11%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin, and Bitcoin, despite this past week's gain, continues to be in a bear market. Will it bounce back in 2022? Will the performance of last week continue into the new week? Stay tuned to find out what happens to Bitcoin and thus what happens to the Southside portfolio. because the portfolio will remain heavily invested in Bitcoin. The portfolio is 82.15% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 10.78% of the portfolio. Cash is 7.07%. The cash flow generated for this week was 0.39% of the portfolio account value. The account value changed by 8.56%. Meanwhile, the S&P 500 ETF SPY changed by 1.53%. I sold option contracts on one position this week. They were calls that range from $0.00 to $274.73. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschooloffinancialfreedom.com. Check out past videos for other questions of the week. They are listed in the description section. Please like, share, and subscribe.